following for many, many years. I think I found you originally through maybe Doug Short's website or something. Chris, can you hear me all right?
Yes, sir, JC.
There he is, Chris Kimble, live from Kansas, United States of America.
Woohoo!
Chris Kimble, guys, one of my favorite technicians out there. I think his work speaks for himself. I'm just going to shut up. Chris, you do you, man.
Thank you, JC. Thank you, everyone, for being on this call. And JC, just so impressed with what you've put together. And, last night Howard talked about paying forward. Every day for years you've paid forward, and this is a real big pay forward, and we really, really appreciate what you've done today. My name is Chris Kimble, founder and CEO of Kimble Charting Solutions, and thank you for being, just here today. As usual, we'll go through our little disclaimer, and we'll move on and have some fun. Speaking just real quickly of paying forward, these are some people in my life that have just really meant a lot, and JC, you're right, Doug Short in the lower right corner, just really helped me out a ton, and so is everybody else, and you're just one of them that's helped us tremendously, so thanks for putting together what you've done, and thanks to John, Josh, Phil, Howard, and Doug. One of the things that when we speak of paying forward, I didn't realize it at the time, but one of my biggest paying forwards was when Sir John Templeton said, Chris, outside of the Bible, this is the business book that I've learned the most from, and we're looking at the book that I got from Sir John 21 years ago, 21 years, this April, and I promised him that I would pay forward and always continuing to bring this book up, and I can see why after reading it. He did say that it was the most popular book. A lot of people think of him as a fundamentalist, but I think behind the scenes he was just one of the best readers of emotional trends, in the marketplace. So, JC, you showed that 8-pack earlier, and Fonny earlier was talking about the books, and this would just be one book I'd really encourage people, to get. John was my mentor, and I, in the early 80s, 1980, I started as a financial planner, and, back then they had sales contests, and I was fortunate to qualify for several. They became named due diligence trips, but in reality, that's what they were, and that was just one of my lucky points to be able to get to know this gentleman earlier, and I turned most of my practice over to his assets. And so this is a long-term S&P chart from Ridex, and the only highlight of this is just the purple sections that Ridex was highlighting was these flat periods. And talking about being lucky, not smart at all, this is where I opened up my financial planning practice, and within a first year and a half, the Dow was down to 800 at the time when I first got going. But the thing that kind of got me the most was a meeting with Sir John up here. So we had a 20-year run, one of the best, as everybody knows, 20-year runs ever. And JC, I appreciate baseball much, and it was neat to hear that you'd went to play baseball in college. But essentially, Sir John said, Chris, the idea of buy and hold, I think, will be challenged. And he said, so to me, it was kind of like Babe Ruth sitting down with JC and saying, JC, your swing sucks. It's not going to work, and help you out. He was making the case that he thought at best the market could be flat for a decade to 15 years. And this is the Ridex chart, and you can see the guy, as he was in many ways, very, very right, that the cumulative 11-year return was like 70 basis points. And so I don't think the market dipped overall as much as what he thought it might, but we do have to realize that there was two 50% declines during that price period that he'd said that. So I came back to Kansas kind of like looking like this little baby. My struggle was I didn't know what to do after Sir John said my swing was broken. In other words, buy and hold would be challenged. I was confused, and what if he's right, and what if he's wrong? What do you do? And so I was essentially 18 years into the practice. Now this is the only thing I've done since college, and this is my 37th year. And so after I came back to Kansas in the late 90s, I was asking myself, well, what if Sir John is correct? What do I do? But, he's not always right. What if he's incorrect? What do I do? And so I tried to struggle and think about, could I find a way to eliminate the noise of the world and to get non-emotional ideas to help me find important turning points in a variety of markets for my customers in the practice at the time. So hence, there came my really serious, I mean, I started looking at the Elliott wave and Prechter's stuff in 1981 or two, and I remember, he said, hey, the Dow will go to 3,000, and it was really low, and he was right, for a while. So I've enjoyed it, for the majority of my career. So I ended up starting Kimble Charting Solutions because I told Sir John that, hey, I've got this practice, and I've got this opportunity to help a lot more people. And he said, Chris, if you just do the right thing, God will put food on your table. Do what really, that you want to do best. And he said, do you want to help a couple hundred people, or do you possibly want to help several thousands? And you see what I chose, and that's exactly what you're doing. JC, you're helping thousands of people, and we really appreciate it. One of the things that we want to remind people of at Kimble Charting Solutions is we're not a bull or a bear. I believe being bullish or bearish is nothing more than a psychological state of mind. So many of the great people so far in this talk have talked about strategies and processes. I couldn't agree with them more. So today's focus is just going to be on kind of one of the processes that I use to try to help try to help find key turning points in the market. JC, thanks for having Peter Brand on, because now I'm not the oldest guy talking today. That was a good, made me feel good. But I believe in the power of the pattern, and I think I might have realized today, when Peter said he didn't use a lot of different indicators, and I think the reason I realized that he said that, and that could be part of my life, is, back when I started doing charting, I was taking the Wall Street Journal to the photocopy machine, enlarging it in the 80s, and using a ruler and pencil. And so I think Peter and I have something in common, that there weren't indicators to use back then. So we have developed a publishing business that we share ideas around the world on a daily and weekly basis. We believe in clear, concise, and actionable chart research. We'll come back to this chart, but here's an example of something that we shared. It's a 30-year picture on crude oil, and we'll come back and talk about this later. But one of the things, going back to Sir John, in one of the many things that he said that's just so great, he said, bull markets are born on pessimism, they grow on skepticism, and they mature on optimism, and they die on euphoria. And so I don't know if I'm just old enough, or I went through college in the 70s and I got one brain cell, but just to let you know, kind of, this is the talk of the day, is the trend, and there's not a darn thing wrong with it. But one of the things that we try to do is help people with the trend, but we also try to look at where does the trend face its most important test, or its emotional points. So today is going to talk about the pessimistic guy and the euphoric person, and how maybe we can find some of these turning points. So one of the things that I wanted to ask, there's two charts that are going to fill in, and one is from the 1700s and one is from the 2000s. And one of the things that we feel that there's algorithms, and the markets have become very sophisticated, but I just kind of wanted to show two charts that were a few hundred years apart, and how from a pattern perspective they look the same, and they may look the same because they were based upon human emotions. And ironically, the chart on the right is from the 1700s. This is a South Sea bubble. And, Isaac Newton was the founder of gravity, but he may have found out a lot about financial gravity, because this is where I read he put the majority of his assets here, and he was a seller there. So he might have done better off knowing some technical analysis, even though he was a brilliant man back in the 1700s. The chart on the right is the Dow Jones Home Construction Index in the 2000s. As I was going around the country, I found a USA Today article that in 2006 that said 50% of new home sales in America were actually second homes. So that made me think of the guy in the upper right. I'd never seen a stat like that. Maybe there was a little bit of euphoria. And so the commonality that both of these have, we've played with the idea of the Eiffel Tower pattern. If you see the left side of an Eiffel Tower pattern, be careful, because you can experience the right side of the pattern as well. Sir Isaac is a true witness to how that pattern can impact people. 1 week ago today, it seems like more than a week ago, but we had the largest global public gatherings in the history, I believe, of the world, or not just, let's say, one of the largest, but there was a lot of people in the streets. That was just a week ago. Seems like a lot more than that. And to me, folks, this plays into the Popular Delusions book. I, at this point in time, don't have the solid knowledge to know exactly what this huge crowd behavior means, but I'd put it on the calendar of some of these events, what's taking place. But to me, it could be one of the most important times to be knowledgeable about crowd behavior and the patterns they create and how to trade them. So To me, this plays right into the strength of the great conference that JC has put together, and I think the opportunities, I don't think have ever been better in the 37 years that I've been in the business. So one thing that we wanted to talk about today is what we call emotional clusters or emotive points. Today, real quickly, I want to discuss how to help spot them, share with you how we do that, how we find them, and how we use these emotional clusters to our advantage. So, you know, all of us on this call today, we're all individuals, but individuals become groups and groups become patterns. And so, like we said, we wanted to try to specify or look today at the two extremes in Sir John Templeton's cycles of the market. So in looking at these emotional clusters, we're going to look at past clusters. We're going to look at the ones that are here in play now, and then the ones that we think could provide a bright future and opportunity for trading. So one of the things, our first step in finding emotive points or emotional clusters is this dog comes to mind because I want to suggest to start long and smooth. In other words, JC several times has talked about using multiple time intervals to look at stuff. So when we look for clusters, we start long, in other words, with monthly charts. We try to smooth them out and use line charts. So monthly line charts are the first place we start looking for these clusters. So this was an example of one of those that we shared with our customers. This is a 30-year chart, and you can see that despite this huge collapse, we could have drawn these trend lines, everyone, as early as 2002, because that's the last blue dot that's highlighted on a monthly close. So both of these lines came to this intersection, and it always amazes me, those lines of long-term length were just sitting out there waiting. They crosshaired there, and look how the close on crude closed exactly on that line. And as all of you know, I don't have anything, none of us have anything to do with creating this other than we're just part of the collective group. So at that time, or I just kind of want to share that on September the 1st of 2001, this is just a snapshot of the front of our blog, I did the headline that the Swiss franc is suggesting that gold will be flat to down for years to come. So I just kind of wanted to share why I said such a silly thing and what kind of cluster was in play, you know, at that time. So the top chart below is the Swiss franc, the bottom chart is gold, but we'll go and dissect each one of these and looking for clusters. So here's a long-term chart of the Swiss franc on a weekly basis. So we'll just kind of start looking, is there any potential, you know, like I said earlier, you know, the trend is the right thing to ride on, but what we want to try to help specialize is where could an established trend be challenged, and that's where these clusters come into play. So here is some of what we're just trying to do is connect these emotional points. As JC said, it's about crayons versus fine point pens, but can we find these? So this was what we had found back in 2011 of the franc, that it had all of these price points coming together that you could have a reversal take place. So this was the leading piece that suggested us to do and say what we did, you know, with gold. So to us, this was a emotive point cluster in play on a very long-term basis in the Swiss franc. So here's gold, what it looked like as the franc was, this cluster was coming into play. I just want to share that if you take the low on the, or the high, excuse me, on the left side of the screen, which is the monthly high in gold futures in 1980, and then you just happen to take the low in 1999, this Fibonacci extension level could have been established then if you'd said, well, here's a higher monthly close. Or you could have established it and said, well, look at the old highs we had here. But the forecast, what amazes me on the Fibonacci, the 261 level, look where the market just stopped on a dime. So also coming into play at that time was a 10-year rise in gold that had never had one calendar year down. It was as it was meeting these price points with the franc. And so this was a place that we felt that a long-term trend had a chance to end. And that's what we want to try to help people with, is not only managing the trend, but looking for what we call TBNM, looking for tops, bottoms, and no middles. So at that time, gold was highly correlated with the franc. The franc was hitting resistance. Gold was hitting a 10-year resistance line. Gold was up 10 years in a row without a loss. Gold was hitting the 261 fib level based on the 1980 highs and the 1990 lows. And I believe bullish sentiment was around 90% at the time. So a good opportunity for a trend to change. And you can see here as it went live after that point in time, gold has now been down for the last 6 years. So here's that was 6 years ago as an example of a cluster. Let's just look at 6 months. There's been many in the in-between, but wanted to share this. So let's start as making a cluster on the pessimistic side. So whatever this asset is, we're trying to remove biases if we can. We'll take the bottom to see if we can find a potential long-term channel. Let's take that same channel and parallel it so we can see there's potential resistance is in play. We have another resistance line coming in. We can see relative momentum was extremely high. If we take the high and the low here and apply the first fibs 161 level, it also meets at this potentially emotional cluster. This asset, 90% of investors were bullish. This asset in July of this last year, and then you can see the results. The asset is TLT, and after this cluster was hit with high bullish sentiment and very high relative momentum, TLT experienced one of its largest 20-week declines in history. So there was a real opportunity. That was obviously a trend change. We were fortunate at that point in time. We shorted TLT, and then we've just taken profits along the way. One of the other things that caught our attention at that time, the top is TLT, and we looked at 1 year performance on the bottom from stock charts. And these were times where TLT had its strong 1 year rally. You can see each time then a resistance line was formed. TLT is having one of its stronger rallies, 52-week rallies in all of its history up against that resistance. That was another piece in the background we used to short bonds at that time. So I'm going to flip through real quick just some longer-term charts that have the clusters already applied, since you kind of got the feel of how we're doing this. But this was silver, and so we had this rally going up into this last July. I'm not a bull or a bear on this. We're just looking for opportunities. But you can see that silver hit a 4-point cluster up here, so it remains in the red falling channel. But there's where a cluster can come into play for risk management even in a bear market. So now let's just look at a few emotional clusters that are in play now that we're getting some attention or watching closely. So this is the US dollar gold ratio over the last 30 years on a weekly basis. And what caught our attention was this potential cluster that was coming into play as resistance at Christmas. So if as this is falling, gold miners are doing much better than the dollar, and then the dollar has had strength, and now this resistance test is coming into play that if it would hold, it would show strength to the gold that could come back. So on a short-term basis, then what we did was we looked at the S&P gold bugs ratio, and as the cluster was taking place in the dollar gold ratio, the S&P gold bugs ratio at Christmas right here was hitting a potential cluster of resistance. So at that point in time, the first trading day after Christmas, which I believe was the 27th, we went aggressive and bought GDXJ at that price point. So where we bought GDXJ was down here on its potential cluster of support, could be an inverse head and shoulders. So there's a big test, in my opinion, taking place. This was our purchase point. There's a big test taking place that it's above this, that's last summer, so about 7 or 8 month falling channel. One of the things that JC has talked about, today is how some things are doing well in Europe. So this is a potential cluster on Deutsche Bank that has just been run over. The high in 2007, everyone, was roughly $130, $35, and it got down to almost 10 at the time of what this last summer's lows. And so in full disclosure, we are long Deutsche Bank on a potential breakout at the arrow in the lower right corner with a tight stop just under the dual support that's underneath it. So one of the things that JC was talking about, we're seeing some strength in Europe. What if Europe does well? What might you play? JC shared some ideas there. What if banks in the States do well, which they have? And what if the US dollar would happen to decline a little? So these are some things that could lend some strength into Deutsche Bank. But obviously, right now the long-term trend is down. So this is a counter-trend play, trying to see if we can get a bounce. But if DB would do well, there might be some other banks in Europe and the States that could follow suit. Obviously, this is probably one of the weaker banks outside of Italy in the globe. Another one that long silver traders will hope holds. This is a silver going back into the 70s, monthly close, and you can see a potential cluster of support taking place right in here. There was a breakout here, and now it's coming back to test that. So obviously, if that would give way, it'd be obvious a place to be shorting silver. So we're looking for a long-term possible counter trend bounce. But if all of that cluster gives away, silver could be in trouble, and you'd want to play it to the short side. So emotional clusters, what we want to look for bright futures and going ahead. This is a busy chart. I apologize, but this is the bank S&P 500, so it would be BKX S&P ratio over the last 20 years. And so we see in the ratio a blue channel that it's stayed in fairly well, and then this other rising channel. So this is a dual potential resistance price point taking place. And we shared this with our customers essentially right at Christmas. So the thing that catches my eye here is since the financial crisis, when relative momentum has been at this upper band, you'll notice that the ratio has run out of gas. And so this is a really big test that relative momentum in the upper right is at a 15-year high, while the ratio is testing dual resistance down below. Now, the risk on trade, we've seen a lot of charts today that are supportive of a breakout here. And so this is a resistance test, but just think from the larger risk on trade, overlooking relative momentum. If banks could break from this dual resistance, that could be a really positive message for many plays in the risk on field. So one of the things that catches my eye right now, why I think this is such a big test for the banks, is we have 3 different channels coming to play on a longer term basis as resistance. We did happen to be lucky and pick up financials at the time of the election. We were long them, XLF and EUFN, European financials, prior to the election. This big pop took place, and we sold into that rally. So we just have a minor, I think a 10% remaining position of our original one from a couple of months ago, as we're right up here testing resistance. If we have a breakout, we sure want to go back to longer exposure to XLF. But here's something that we're really watching is the long-term trade. There's definitely a cluster of resistance overhead, so it's very important for, to me, the banking sector to break through here. Wouldn't want to see weakness start taking place. So one of the things from a big picture perspective, I know JC, when we were out at Stocktoberfest, we both discussed this and shared it. Nothing fancy, but it's just on the left, looking at the Dow monthly, going back almost 20 years. On the right chart, it's the S&P, and nothing fancy, but Fibonacci was applied in the first 161 level. I think most people in the technical world can find this, just really interesting that both traded sideways, both indices for almost a couple of years, just underneath the key fib levels, and then both happened to come back down and test the fib level that was resistance, now is support, and they both pushed higher. And as we celebrated Dow 20,000 this week, Uncle Fibonacci would say long-term next level of resistance based on 2007 highs and 9 lows would come into play at Dow 25,000 and S&P 3,000. So it'll be interesting. This has always been fascinating to follow. Now we have a breakout, and then just a lot of positive things that all the brilliant people have shared over the last day would suggest there's still some more strength to come. JC had talked about earlier, and obviously there's a lot of interested parties in where the dollar heads from here. One of the things that I find interesting about this pattern, it's the U.S. dollar for 20 years on a weekly basis. But if we just take the high in 2000 and the low in 08, the rally that we've seen in red is back up. Here's the 61% level, 61% retracement of that move. But then if we take the low and the high and apply Fibonacci, the 161 level comes in. And I can't verify this at all, anyone, but I just haven't seen too many times. I'm not going to say it's the only time, but it seems to be uncommon that you could have a couple of really long-term fib levels coming into play at this price level and also at the top of a rising channel. So I would agree. Here was the close on Friday. Several people have shared how important the 100 level is. And I agree with JC that shared, I mean, the trend is up in the dollar right now. So when we talk about, we want to share with where an established trend could be challenged. This is one of the more unique challenges that we've seen in a while. And obviously, if it can take out the top of this, 130 could easily be reached. Right, excuse me, 115 could easily be reached. So here is the dollar again on a monthly basis. The blue shades would reflect that there's two long-term channels coming into play. Then the pink shades, all I did was take a time sequence, and all I did was take the low in 92 and took the high here in 2001. And so the pink shade on the right is just the same time frame as on the left, and then laid it on the low of 2008. So it's intriguing to me that 618 fib levels plus two long-term channels come into play and a time sequence at the same time. So, going back, where could an established trend be challenged? This is a real big challenge point. And then obviously, if it could take this out, I could see the world really jumping on the U.S. dollar. So there's potentials of a lot of ripple plays at this really, I think, a very significant technical price point. Some of the plays that I'm finding interesting on the make or break, in the upper left is the gold bugs S&P. In the middle is GDX. We have the Swiss franc in the upper right. The lower left is GDXJ. In the middle is SIL, silver miners to silver ratio, and the lower right is SLV to gold. So the four-pack on the left, if we zoom out, they're in longer-term downtrends. Could these be bull flags? I just think it was great timing. I know JC knew what he was doing here, that we could meet on this day and have all of these testing breakout levels. Obviously, for the risk-on trade, none of these would want a failure and see these things slip back in the top of the channels. If they would break out, I think it could be just attract a lot of buying. And obviously, the Swiss franc is testing a support. We had said to sell the metals here in 2011. They could go down for years to come. This is like a 10, 15-year support channel test that's taking place. Oops, excuse me. My bad, everyone. But if the SLV, GLD, some people talked about this earlier today, if we'd see a rally in the franc, and if the SLV, GLD ratio would break out here, most of these probably would really start doing something in a positive way on this left side. So those could be some of the really current plays that somebody could be looking at. And then obviously a failure of the Swiss franc right here would suggest that a lot of these on this left side are really in trouble. So to me, this is a fun opportunity from risk reward on both sides of the fence here. So one of the things that we just try to talk about is we want to be your 28-second solution to investment research. We'd like to provide you with some ideas that you can see what to do. Howard last night talked about some voice applications. Howard Lindzen was talking about some voice apps and applications that we could be going that route, and a lot of things taking place. And he said that when there was people that he trusted a lot, such as JC and others on the call, all he needed was a simple ping. Hey, go take some action. And so that's one of the things that we're trying to do, is just make it as simple as you can, that you can see our ideas on clusters and reversals and not have to spend tons of time piling through research reports to see what action ought to be taken. So it's just so appreciate the time, JC, and this is our website if anybody's interested in looking at this older guy's noise that we've had fun creating, for a lot of years. And I just can't thank you, enough, JC, for what you're doing for all of us.
It really is my pleasure. I mean, when all's said and done and all the archived videos are sent out, we're going to be pushing
JC, did I lose you?
quite a lot of people. No, I hear you. You hear me? Do you hear me, Chris? Hello?
Well, Jason, if you're still there, I just wanted to say, in appreciation that we have a lot of different packages of research and different things. I'd encourage people to just test drive what we have with no risk. So you can test drive our premium research, which is just daily research to everyone. And we're going to offer today that people can look at us for free with no strings attached. If you'll send us an email, you can see our email in the lower right corner, which is services@kimblechartingsolutions.com, or you can call us at our toll-free number. But on our website, thanks to JC and what's been done today, if you use the coupon code of PSTART free, you can have a free month.
Chris, I love it. Can you hear me now?
Yes. Sorry about that.
Oh, okay, terrific. Yeah, Chris, again, just thank you for being a part of it. I mean, we're talking tens of thousands of people around the world that are tuning in and listening to this. And, I think I said it before, if there was nobody tuning in, I mean, I'm winning all day, listening to all of you guys. This is something that I called my favorite technicians, is really all it is. And it turned into, something that I think turned out to be pretty special. So, I don't think it would have been as good as it was, if I didn't include you. So I really do appreciate you being here.
Well, thank you, JC. You're a special person, and blessings to you and all your fun endeavors.
Thank you. I look forward to, you're going to be in New York in April or late March?
Sure, thinking about it. I believe so.
All right. Well, beers on me in New York. And for you guys wondering, at the end of March is the first annual Stocktoberfest East, which I'm sure several people here presenting. We're good friends with the Stocktwits community. Stocktwits is what has brought a lot of us together. My good friend Ian Rosen is the CEO. Howard Lindsay, the founder. So real tight community, and it should be a killer event. You can go to stocktwits.com and go to their events page, and you can see that. Hopefully Chris is there, and we'll look at some charts and party. Is really what it's about, right?
Looking forward to it, JC.
All right, Chris. Thank you again for being here. You're the man. I really do appreciate it.
You bet. Cook up some good meals for everybody. I know you're a great cook too. See you, buddy.
Something like